Jim actually went to the University of Illinois, one of our rival schools, but not going to hold that against him. And he got his bachelor's degree from there, and then subsequently earned a PhD in economics from Northwestern University. He spent, some of his 15 years of his early life in Pakistan, and then after he got out of school, he went to Washington, D.C., spent several years as, researching for the Federal Reserve Board, and then has spent the past 22 years in New York City with JPMorgan Chase.
Hotel, they had, it's the only place I've seen this in the country, they have little sayings on the door like fortune cookies. And the saying on my door, and I bet you can still find it there, the saying on my door said, people who live within their means have no imagination. You might have left your heart there. A lot of people lost their minds. This was ground zero of the subprime debacle, right? Why folks in San Francisco thought it made sense to buy places in Sacramento Valley and reverse commute for 2.5 hours is beyond belief, if you ask me. But as I was thinking about that theme, it's bad advice for consumers, by the way. But as I thought about that theme, I thought to myself, imagination is an important part of how you think about life, particularly for the business community and for the relatively hopeful. I agree with the sentiment that we fell into a deep hole here. It's going to take us probably 10 years to get back to full employment. It always takes a long time to get back to a fully employed economy, but I think it's going to happen, and I'm fairly optimistic that we're kind of on the road, as you can tell from the title page. Important theme. What's going on in the U.S. and globally, we're all very synchronized. We went through an impulsive collapse in 2008, 2009, and the global economy, these various lines are showing you trends in Japan, Europe, U.S. The global economy is a shaded area. We're all recovering. Different pace, of course, but all recovering. Just a couple of bullets on Arizona, by the way. What I think is kind of interesting, given that you were near ground zero of the housing debacle, this picture was showing you unemployment trends, the nation, the shaded area, the black line is Arizona. Kind of striking to me that Arizona is looking real average relative to the national average, the national trend. If you want to see what it's really like, just like California and Nevada, in places where they really are struggling with real estate problems. And the other thing that's interesting to me about Arizona, you are taken aback by what happened to your job market, but I'm telling you, there are a lot of states that would like to have your problem. This picture is showing you the level of employment in the nation, the bottom line, relative to where we were in the fall of 2000, the previous recession, versus the blue line, which is Arizona. You've lost a lot of employment, but you, in contrast to the national economy and in contrast to many, many states, your employment base is still a fair amount higher. The ability to set short-term rates below long-term interest rates, they change the incentives for you and me. We look at our money funds, we don't see we're earning much there, so what do? We have an incentive to move money out of cash into risk assets, high-yield funds, corporate funds, equity funds. That's a process that's been going on for the last couple of years. And it is that mechanism, that incentive to take risk, to remember that there is a future, and behave like there's a future, and invest like there's a future. It's that process that helps to get things moving. And this is why all the news you hear from the financial sector is starting to sound kind of interesting. What I'm telling you is it looks like the tide is starting to come in. But realistically, if you think about it, we fell into a very deep hole. It takes a lot of growing and a lot of luck to move out of this. It may be a good decade before we get back to a fully employed economy somewhere with unemployment in the 5% range. When you consider all the hidden unemployment that's out there also, this takes a lot of work. And it's one of the sober lessons of these cycles that we go through. It doesn't take much to derail things. It takes us a long time to recover, and I think